Okay, so just one last check. I'll start the PowerPoint up. Can everybody see basically a picture of water and land? Just give me a quick okay if you could down in the chat box. Okay, so welcome to the March 31st Farm Business Consulting webinar. It's going to be focusing mainly on the USDA report that was released this morning on their seeded acreage. Now, this is something I've been holding on to, obviously, since the earthquake and tsunami in Japan, and I found it very interesting. I found these two pictures online, and here's a coast and port in Japan, not really sure where. As you can see, here's a bunch of their farmland in here, and here's their coastal frontage. I click the next slide here. And there you see. Just hold on a second, guys. I've just got getting an echo in my headphones, so. There, that should stop it. So as you see here on the Japan port after the tsunami, you see all of the dirt and mud and sludge, everything that washed up into here. That's, I don't even know how many people would have lived there, but I mean that's just an example of one of the things that was happening there and how devastating it was. I always find it interesting, though, that was kind of the soup du jour of the week for the news channels, and once they got overexhausted on radiation levels, you can't even find it on CNN or Fox News really anywhere. So that's another interesting point. So now we'll get right into the acreage. This was released this morning, and I hope everybody's a number junkie because I am. And there's a couple interesting things I just want to point out. It looks like a lot of numbers, but I'll try and narrow it down. Some things we don't even have to worry about is basically the durum, the sorghum. Cotton's a little bit of an interesting point, but the big ones going into the report was corn right here. 92.18 is what it came in at as the USDA estimate what's going to get planted this year. The trade thought it was going to be basically 91.8, so there's about 400,000 more acres than what they thought. And as you see by a corn locked limit up, it has a lot to do with this, but this is only about 40% of what's driving the market this morning. The trade thought it may be as high as 92.6. DTN figured we needed at least 93.4 in order to meet supply demand and actually grow stocks. Another interesting thing, just hold on here. So basically, with the 92.18, last year it was 88.19. I mean, you can see what the numbers are. 4 million more acres, but not enough really what the trade thought they needed. And we'll get into that a little bit later as supply demand. Beans is another one right here is beans. It was 76.6. Last year, 77.4, so about 800,000 acres less. We'll get into how the supply-demand issues look like. This is a very interesting point, though, with beans. This is what end of February, what the USDA and their market outlook thought it was going to be was 78, and you see it came in quite a bit less. The real surprise in the report was the wheat. And not necessarily well, spring wheat was a bit of a surprise, but it was mostly the winter wheat. Um, back in the fall, the USDA released what they thought was going to be in the ground. Of course, it was anybody's guess to this report. The trade thought it was going to be about 41 million acres, and it came in right around there. Spring wheat's supposed to be up, but you'll also see later in the presentation that why I don't think it's going to be up, because of how wet it is in the northern states and the prices of the grain as well. Now, this is the big part of the report down in the bottom here, if you're following my little red dot. This is what's really driving the market this morning. And for those of you I talked to the last couple of days, I said it wasn't so much the acres, it was going to be the quarterly stocks. I guess it looks like I was right. Anybody's guess what the quarterly stocks were. But when corn dropped down to $6.14 a bushel, 2 weeks ago now, 2.5 weeks ago, that encouraged a lot more trade. Same with beans when they dropped down into basically the low $12 range, or sorry, the $12.70 range. Encouraged a lot more sales in beans, plus Brazil and Argentina crop problems that they've had with quality issues. China has been coming to the U.S. and buying. That being said, it's also because of the U.S. dollar. As you see here, the U.S. dollar index at 75.8. That's probably about 75.5 will be the lowest it's been in basically about 6 months. So that has a lot to do with it too. The grains are cheaper for them to buy. So even as beans go up to $14, corn goes up to $7, it's still really from yesterday's prices, because this has dropped a quarter of an index point. It's not that much higher. So I don't even think the prices that we're currently at today are enough to curb export. And this is what happened this morning in the report. Corn was way below their average, and worst case scenario, if you're bear in the market, is it was way below what the low end of the spectrum was. Anywhere in between basically the 66.9 and 688, that would have been acceptable to the trade, but obviously it wasn't. Another important fact is this number here is a year ago today, and or to date, I should say. And as you see, there's basically a lot more. There's basically 1 billion more bushels of corn remaining in their stocks. So that's why corn was still trading at about 350 at this time last year. You'll see a little bit later as to what's happening in corn. Now, this is a big thing. This is back in the corn acres. One thing I want to point out is, let me grab a different highlighter. This is how the acres have changed. This is kind of a reverse chart. I didn't make these, I just stole them. Corn basically in 2005, for what the final acres are to what was predicted in this report, which is represented by the blue one, always have come in higher. The only time the corn acres came in lower was 2006, and it wasn't, or sorry, basically 2008. In this area right here, but they generally come in higher. So even at that 92.2 that we're talking about, as you see, the final acreage, if you were to say, okay, this is today, this is 92.2, likely if I was to be holding a webinar when the final acres come in October and December, sorry. It'll likely end up about right here, probably the 92.5. Still not enough to feed their supply-demand issues. Now, this is a demand chart of corn. I don't want to bore you too much with the numbers, but charts can definitely tell you where the trends are. And this is basically this blue line right here. I don't want to be switching back and forth between my highlighter, but I'll just use the mouse. This blue line right here is basically a 15-year average. This is a 5-year average. I think a 5-year average is more important because it's more reflective of ethanol in the market. 15 years ago, not so much. It was mostly just feedstock. And as you see, demand has been increasing quarter one all the time. It's like demand in quarter one was higher of the crop year. Quarter two, higher again, and we can anticipate most likely it's going to be probably coming in about here in quarter three, and the only way we can stop it, sorry about that, The only way we can stop it is either with price or more acres being seeded. More acres being seeded are slightly likely, but not a million more acres. So price is going to have to ration it. And this is what, whenever you read me when I'm writing about price rationing, that's what's basically happened today. That's why corn's up limit and likely will go about another 30 to 40 cents tomorrow again too. Is it's got to be rationed. It's got to stop countries from buying from the U.S. Okay, so now we're getting into the corn plantings, and now we're going to get into forecasting the future. This year it isn't even in the ground, and I'm already going to start talking about next year's plantings. It's the reason is because it's always today's report is basically a starting point for next year's crop. Everything from that crop will be reflected back to this year. Next March, when you're watching me do another report on this, I'll be using this last year's numbers for a stepping stone as to where we started. So the big thing, there's a few things I want to point out, is this trend line yield. Basically, it's their average yield. It's just like what we use in the database for our average yield. One interesting point is 162 bushels has only been broken once in the U.S. And that was 2 years ago, 2009. It was 164.3. Yet they're using 162 for an average. It kind of sounds strange. If you go to the web page under chart of the week, I uploaded on Monday. I put a new chart on there as to corn yields, and you can get a little bit more in depth as to what I'm talking about corn yields. I've only seen, like I said, I've only seen 162 or higher once, and I've been in this business a fair amount, actually watching it for at least 14 years, and I know yields are going up because varieties are producing more, farmers are putting more fertilizer, all that good stuff. But this is what the trade is using right now, and that's why we're going to get into any little weather, and it will really create a lot of volatility in the market, because any compromise to this number, and here's an example. Last year through the summer, the USDA, when corn was trading at $3.50 to $4, the USDA was saying 64.3 is what they were saying for an average yield. Then the end of August, they said, oh boy, we didn't have a good silking phase where the yield is developing. Now we're down to 58.6. When all the numbers came in, it was 56.9. So they dropped at 8 bushels an acre. And the reason that's important, and you'll hear me say, you know, their yield is going down or being compromised, is because that every number under here reflects from this number right here. So as this goes down, I mean, you all know the math, how it works. I've showed you on the database. And this is the big number, stocks to use ratio, that I've always talked about. Sorry, I had to save some space here with the stocks using the X in there. But anyways, stocks to use ratio forecasted for next year. This year is forecasted at 5.4. So we're at $7 corn. Our stocks to use ratio is 5.4. Next year they're forecasting, with only 92 million acres, and if this average hits, our stocks to use ratio is going to be 3.8. So stocks aren't growing. It means they're using more and there's less stocks. Now, drop a number in here like even 159 or 158, this number will drop into the low threes. If China's still buying corn at $7.50 and $8, and it could even be $8.50, they're going to still be buying at $9.50. So, I mean, that's what's driving the market right now. And going further out into the next year, sorry, this is wrong date up there. It should be 12 to 13 on that date. If there's still, let's say, the same amount of acres going in, I mean, their stocks to use is always going to be going down because their usage is going up. So the ending stocks, what they always figure in the States for corn is big. I'm going to spend way more time on corn than soybeans. But nonetheless, they bank on 1 million bushels. This is a billion bushels. This is a 500 million bushels. They bank on that 1.000 being the baseline. Anything below that is drastically low. And you see, we're forecasted to be well below that.